Hello guys, this is Sanjay here. Uh, we are here today again to learn about the balance sheet. As you know that the balance sheet is one of the three important financial statement of the company. So like the first is profit and loss account. As you know that profit and loss account consists only the expenses and the incomes of the company. So when you deduct the expenses from the income of the company, you will get the profit, right? And that profit will be transferred to the balance sheet, and balance sheet is the second important financial statement of the company. So as you know that the balance sheet, we can say that it is the picture of the financial position and assets and liability and the equity of the company at a particular time. Like it's a like a snapshot of the financial position of the company. So you can take that snap at any time, like 6 months, half yearly, quarterly, 3 months, or yearly as well. So normally people do it like 31st of March or sometime 30th of June. So they normally do that. So here we can see that there are a lot of things like assets, current assets, liabilities, and there are different kinds of liabilities like current liability and total liability. The same as like the asset, total asset, like divided into many type of assets like fixed asset, current asset, fictitious asset, right? But I just wanna show you something. Like if you don't know about the equation of these assets, liability, and capital, this is little bit typical for you to go through the balance sheet. So I just wanna explain you a little bit about the equation. So we call this normally accounting equation, and accounting equation is like uh, we can see here, assets is equal to liability plus capital. So asset is always equal to liability plus capital. This is like a universal truth, or you can say that is it is like a standard definition. This definition can't change. It doesn't matter you go to the another country or go to the future and the past and anywhere. This is like a truth. We cannot change it. So there are some example I want to do for you so that you can get an idea how we calculate all those steps. So for example, if we take the assets like 100,000 and you have a liability like 50,000, so you have to keep in mind like the two out of three always given and one is missing, and you can calculate it like you do the mathematical sums. So you have 100,000 assets and you have a liability of 50,000. Then what you do? The equation is assets is equal to liability plus capital. So that means you have a total asset of that one. If you minus liability, you will get the capital, because asset is a combination of liability plus capital. If you go there, so capital is 50,000, liability is 50,000, and you will get 100,000 there. And the second one, um, we can say like you have a asset of 200,000, and here you have a capital of how much you want it, 70,000. Anything you can take it. This is just for the practice. So is equal to assets minus capital. You will get your liability 130,000. So if you add up together, you will get your assets. The next scenario is you have to find the asset, how much asset you have. So if you have a liability of 150,000 and your capital is like 75,000, what will be your asset? Is equal to liability, oh sorry, is equal to liability plus capital. You will get your asset is uh, 200 $225,000, any currency you can have it. Okay, so now you get the pretty much idea about what is asset, liability, and capital, and how you calculate it. What is the equation? So now we go through the balance sheet. Yeah, this is really easy. This is the format of balance sheet. The first you have to take the assets. Then set is divided into two parts, like a current asset and the fixed assets. Then here is a total asset. Then liability. Liability is divided into the two parts as the same as the asset, like a current liability and the total liability. Then you have a shareholders equity. So I'll give you a little bit definition after when I do it. So let's do it. So I'll take the value like as a like estimation or fictitious, because I don't have any company data here. So I'll do for you like what I have in my mind. So normally you can have like how much cash you have in your company. Normally we don't have much cash in our company because this is like a liquid asset. So mostly the people are invested a lot of cash in the asset so that they can earn more cash, right? Okay, so we take it like a 50,000. Yeah, if you wanna go for like the second year would be fine, but okay, I'll do only 1 year and you will get the idea for second year as well. Account receivable. So what is account receivables? So as we the sounds receivable, you will get an idea that you are entitled to receive something from someone. So normally the big companies normally do their sales on credit basis. So while they sell the goods on credit basis, so they generate debtors. So the debtors has given like a credit period for 30 days, 60 days, or 90 days, or 120 days, whatever. So these are the receivable. You have you sold something to people and you're just waiting for the memo, right? So I'll say you are waiting for $150,000, right? And another is prepaid expenses. So this is sort of set as well. So prepaid expenses, so you can think that expenses should be recorded in the profit and loss account, but why it is here? So actually prepaid expenses we deduct from the profit and loss account from the actual expense. So has the name speak itself, like a prepaid, you have paid something in advance already. So I just want to give you an example, like if you are getting electricity bill, not electricity bill, but if you are giving like an installment, like a 10,000 every month, and you have like a 12 months to pay it off everything. So in the month of January you already paid for the February as well. So like instead of paying like 20 instead of paying like $1,000 or $10,000, you paid actually 20,000. So 10,000 you already paid in advance. So that is prepaid expenses, because that is like your asset. Okay, so I'll put prepaid like 10,000. You already paid 10,000 in advance instead of paying your actual expense in the profit and loss account. So inventory, you know that what is inventory? Inventory is our stock. So whatever you buy for selling is an inventory. Even some of the assets, like if you buy a car for yourself, for the personal or for the company, it's like a asset. But if you have a business of cars selling, that means that is your stock or the inventory, because you are buying for the selling, not for your personal use, right? So inventory, I'll take like 75,000. Okay, so we can get here, I'll sum up everything together so you will get your idea or amount here. So $285,000 you have current asset, but still this is your current asset, but still you have a fixed asset as well. So this is a category of fixed asset I didn't mention, or I didn't make a head over there, but I'll give you the I'll explain here. Like property and equipment, it can be anything like a building of the company where you are doing your business, like, and equipments like the can be the computer, can be your car, can be the furniture, uh, can be laptops and anything uh, what are you using for generating the profit for the company or generating the sale for the company, right? So you can put here like furniture, car, land and building, a lot of things. If you go to the Google, then you will get the idea of all the fixed assets, right? So fixed assets means like you are not converting those assets within the year, you are taking it for a long time, and normally we charge depreciation on it, right? So we can have that, I think $250,000, right? Okay, so goodwill. So what is goodwill? So actually goodwill is not a tangible asset, it is a intangible asset, you can't touch it. So like I'll give you the example, like if a small shop is making a burger, so their burger should be how much, $5, right, or $2. But if you go to the McDonald's, if they will make a burger for you, so they will charge you more because they have a goodwill, they have a reputation, they have a fame of the company, they have a big name. So that name actually affect the price of the goods. So like you can drive a normal car, Toyota and Nissan, but if you go for the BMW or the Mercedes, so definitely you have to pay more. So actually maybe the same car or maybe a little bit up, and they have a, like more quality things, but actually they have a big name, so that name is called goodwill. So also take 50,000 for the goodwill. So now you can get your total assets is equal to formula for the sum, and you can 85,000 to 50 plus 50, right? How much you get? So you will have $585,000 for the total asset of the company. Now we will working out the liability. So there is a current liability. So the first item is accounts payable. So what is accounts payable? It's actually the opposite of account receivable. So actually receivable is like you are expecting something to receive, and account payable is you are supposing to pay something to someone, right? So if you're buying something on credit from someone and they will give you a credit period, uh, and then you have to pay after like 30 days, 90 days, 60 days and whatever. So that's account payable. So that is like you are paying to your creditors. Account receivable, you are receiving from your debtors, or sorry, debtors. Accounts payable, you are receiving, oh sorry, account receivable you are receiving from your debtors, and account payable you are paying to your creditors. So it should be I think $50,000. And accrued expenses, what is that? Actually accrued expenses, it's like opposite of prepaid expenses. I told you before, prepaid expenses is you are paying the installment for the feb in the month of January, right? And accrued and outstanding expenses is like we can say it like a accrual as well. So it means you haven't paid yet, because you don't have money to pay it, because you are expecting money from your receivables. When they will give you, you will pay your expenses, like you get a electricity bill for the month of January, but you didn't pay it in the month of January, so it's still outstanding. So when you get the money, you will pay it. So any expenses which are outstanding or unpaid or accrued, anything you can say it. So that means the expenses didn't pay yet or haven't paid yet. So you can get it like $25,000, right? So we'll get here some, okay, total we'll get 75,000. Long-term debts, that's our long-term liabilities. So it's like the same, like a current asset is are those assets which are converted into the cash within the year, like the inventory. So if you sell the inventory, you will get your cash immediately. Like account receivable, when you get a money within the year, definitely you will not go longer than years. So that can be converted into cash. And prepaid expense is like a cash, so it's a current. A cash itself is a cash, is liquid. The same as in the case of liability, if you are paying your liability within the year, that means that's current liability. But if you're looking for longer, like the bank loans, this is not for you. You doesn't need to pay within the year, but that's like a payments for the 5 years or 2 years, like more than 1 years is considered as a long term. Okay, so we take it like how much? Okay, so we can take it 150,000, right? So now we, okay, I'll total, no, I'll take it like a little bit less. If you take it 100,000, should be all right. Okay, I'll take the total now, sum up everything, current liability plus total liability. Sorry, left one thing, and there is other long-term liability. You can say that it's like another long-term liability or other liabilities, because I already took long-term liability there. So other liabilities can be anything, any small loans you have to pay within the year, right? Or yeah, or other long-term liabilities, because we already consider paying within the year for the current liability. But other long-term liability may be anything, any loan from the financial institutions. So we'll take it like 10,000, right? Okay, we're good to go now. So we total, oh no, we have to reduce something. If I'll take like only 50,000, so we'll get like $135,000, right? Because we can't match. Oh, okay, how much I took it from here? So 150, okay, no, 10,000. You can change with anything, that's up to you. So you had 2,000, 235,000, and your asset is $585,000, right? Then you have to calculate your capital. So I can calculate easily, because your total liability and capital means shareholder funds is always equal to the assets. But there is a little thing what we called as a retained earning, right? So I'll just highlight it for you in the red. So what is retained earning? So I already mentioned you when I was explaining the profit and loss account actually. So now you know, when you prepare your profit and loss account, then you deduct your expenses from the income, and whatever left, right, that is called profit. So profit go to the shareholders. So there are different type of shareholders, and it's depend upon their percentage, how much they carried, depend upon the investment they had in the company. Like some take 50%, some take 30% or something. And sometimes what happen, they don't distribute all the profits, not sometime but normally happens. So they distribute a some of the profit, but they save some of the profits, like as a reserve for the expansion of the business, or for um, anything that comes up in the future as a contingent liability. So that profit, that leftover profit, after distributing the profit to everyone, like we called it dividend actually. So the first you distribute the dividend to the people, then dividend is a part of the profit, and it's also the another name of the profit. And whatever you left, that is retained earning. So retained earning is a profit left over after distributing all the profit or the dividend to the shareholders, right? So if I put the dividend here, you will not get your equation balanced, so I'll do it here. How you calculate your capital? So I just want to say that, like, okay, so you have total asset minus total liability, you will get your capital, right? As I told you above there. So your capital is 350,000, and if your retained earning is like a 10,000 or 12,000, right? How much is your capital actually? So your shareholder fund is how much? Capital and shareholder funds, that much, right? And okay, so if we calculate all these things, or if you want to put this here, it's all right. Okay, if you put 12,000 here, how much you get it? Minus this, right? So you will get it 338,000, right? So so what you have to do, you have to calculate your capital. You already calculated 358,000, and you already deduct how much from that capital? 12,000, and your capital is now this much, right? Now I calculate everything and see if we get the same total as I said. Come on, what's going on? So what I did that? Okay, just wait for a while. I put the shareholder funds here and there as well, so I need to remove this line for you. Yeah, okay, now we can do that. Sum is equal to total liability plus shareholder funds or the capital or retained earning. See, okay, I'll remove this for you as well. So we will get the same total what we have in the set, like 585,000, and here is a 585,000, right? This is the case if you have retained earning. If you don't have a retained earning, you can do it easily. Like if I remove the retained earning from here, like, okay, I remove the retained earning from here as well. So what we can do that, so as I told you, total liability plus total share capital, right, is equal to assets. So what we do, total asset minus liability, right? So here you will get your shareholder funds, or I will write it there, sorry, total asset minus total liability, you will get that much. And if you go and total all these things all together, you will get your $585,000. So if there is no retained earning, means zero, not a problem. But if you want to put retained earning here, you have to make a little working note here, like I did. Then you have to change 338,000, and then you have to put like 12,000 for the retained earning. So it's not changing because the formula is up to only that much. you increase the formula, you will get the same thing. So here we can say that we get it like 585,000. So I hope you understand something, and definitely it's really easy, and I explain um, each and everything very well, I think. So I think you enjoyed this video and have learned something, and if you have any comment or any topic you want me to talk about on my YouTube channel, I'll do for you. So please, if you have learned something, please like it and subscribe as well. So I'll see you in the next video. Thank you very much.